As you know, Peter, we've completed one of the best Julys on record, and we're now into the third quarter of MLS activity. However, 1 month doesn't make a trend. How are we doing with a broader perspective?
Well, as you know, Richard, we did start off the year with a slow start, with March in particular being below normal expectations. However, and we did correctly determine that because of that harsh weather that really carried on into April, we didn't really get our normal spring market beginning as we would expect. But we've already made up headway in the last few months. As you indicated, July was a spectacular month, and we've had a decent second quarter as well. So now at this point in time, at the end of July, with 7 months into the year, we're actually seeing our dollar volume being 1% ahead of last year. For the second year in a row, we went over $2 billion in dollar volume activity, and MLS sales are only off 4%, and that's actually what we predicted because we knew we were up against a really good 2012, and we also had the added stress of tighter mortgage regulations, which have pushed some of those buyers by the wayside. We're really seeing a healthy supply of listings throughout the year, and in particular, July was really set up with nearly 4,000. We're in that same enviable position in August with nearly 4,000 MLS listings. So again, we should have another really solid month. And what that means is that buyers are having a better choice than they've seen in many years. And also for sellers, they have to be aware that it's a more competitive market. We're seeing more balance. So they have to be aware of that situation as well when they're listing their homes in August.
Moving towards a balanced market is good for everyone.
Yeah, I think we've been looking for that for the last number of years. We're now starting to see some of that transpire in 2013.
Can we expect that the market will react dramatically to the federal government's decision to limit mortgage financing available to lenders?
You know, what I can ascertain is that it's going to add some bank risk, and that may translate into some very modest mortgage rate increases. And likely what's going to happen in the short term is it'll get some of those fence sitters to lock in a favorable fixed rate term and purchase a property.
One of the most active areas of our marketplace is condos. Would you like to comment on that?
Well, we've seen a real flight to affordability this year, and condos have benefited from that because their most active price range is $100,000 less than single-family homes. It's from $150,000 to $200,000, whereas single-family homes is from $250,000 to $300,000. So it really has been outstanding. And actually in July, there was a 38% increase over the same month last year, and year-to-date, condominium sales are up 13%.
Exciting. As always, anyone entering the housing market would be well advised to seek the advice of a realtor.